Welcome back to the channel. My name is Steven. I'm a pharmacist. I own 52 units of real estate and I help coach people to buy their first multifamily deal. So today I want to talk about why was so desperate to build up my wealth, to build up my net worth, to build up my assets before I had kids. So for me, I started my investment journey in real estate really in 2017 when I was 27 years old. Before that, I graduated farm school at 23. I came out with $250,000 of student debt, and I spent the first 4 years just trying to pay that off because that's all I knew, to be honest. So 23 to 27, all I did was try to make more money, keep my expenses as low as possible, take that difference. I would invest in my 401k and stuff, like very minimal investments, to be honest. And I would take whatever money I had to throw at my student loans. And that's all I really knew how to do because that's what my parents taught me. And they just taught me that debt was bad. So I just want to pay off my debt. So during that 4 year period, I paid off about $250,000 of student debt if you factor in interest and all that good stuff. And in 2017, that's when I said, okay, I finished paying off this debt. What's next? And for me, what next was buying a home. So that's when I dived into real estate, started off house hacking, and then eventually, did that for a few times. I literally just worked, saved money, put 10% down on a house hacked it, worked another year and a half, saved 10% down, put 10% down, house hack it, and I did that 3 times in a row. So it wasn't very glamorous in the beginning, if I'm being honest. All I did was work, save money for a down payment, put 10% down, and then I would house hack the property to help me save more money and to lower my living expense. So, it's not rocket science, it's not crazy. It's just simple things done over a long period of time. That's how you build your wealth. So that's how I did it. Nothing fancy, nothing special. I just did that for a while. And from there, I basically scaled significantly during COVID when interest rates were low. My equity on my properties went up significantly. Like I said, I didn't know at the time that all my properties would skyrocket in value, about $80,000 to $100,000 a year during COVID. So I bought in 2017, 19, early 2021, and these properties were just going up 80 to 100K a year, which was crazy. So and interest rates were lower. So when interest rates were lower, and this was peak COVID, where you can get 2.75% interest rates or something like that, I would do a refinance to lower my rates so that I could save money. I remember I refinanced one property from 4% to 3.1, and it saved me about $500 a month. Another property I bought as a primary residence to house hack, I got a 2.875% interest rate. Another property, I did a huge cash out refinance at 3.65, and I pulled out $1 million to essentially go buy apartment complexes, two apartments, my mobile home park, to help me get to my portfolio of at one point 90 units. Today it's 52 units because I sold my mobile home park for a loss. So for me, I did this all relatively speaking young. So at 27, got my first house. 29, I had 2 houses. At 31, that's when I scaled. I bought another house. I had 3 houses, and I bought my Huntsville, Alabama house. That's my 4th house. And then I did a cash out refinance at 31 years old, and I bought my 26 unit apartment complex. I bought like a 30 unit or lot mobile home park, and I bought my 20 unit at 32 years old. So at one point at 32, which was 3 years ago, believe it or not, 35 now, I had 90 units of real estate, and I ended up selling my mobile home park for a loss. I have videos talking about that. Sold that at, I think, almost 34, so about a year ago, a little bit over a year ago. And so now I own 52 units of real estate. And I remember for me, during this whole window, I just felt like someone pointed a gun to my head and literally said, Steven, you have to buy as much real estate as possible and retire as fast as possible. And I acted accordingly. It just felt like I was in a frantic, manic frenzy where I just was so desperate to get deals. And what's even crazy was when I had 90 units of real estate, I had an RV park, mobile home park under contract with my same um, mobile home park third party property management. Thank God I didn't get that deal because it fell through. I got that deal, I probably would have lost another couple $100,000 on that deal and maybe went bankrupt because fast forward to today, found out that CCI, they are poor operators. They don't run a ethical business model and they just don't operate well. So I'm so grateful that that deal fell through. And I'm so grateful that I was able to sell my mobile home park and only took $100,000 loss. I'm grateful that I only lost $100,000 and got a nice tax refund that year that I sold my mobile home park. Ended up getting back about $30,000-$40,000 because I got to write it off my W-2 income because took a loss, which became an active loss. So for me, it was a blessing in disguise. But anyways, I felt like I had a gun to my head and I felt like I was very desperate to retire as soon as possible. So I really started to scale when I was about 30, 31 years old, when I started watching, more podcasts on Bigger Pockets and just seeing people who they just scaled massive real estate portfolios. I had fear of missing out. I felt like I was behind. And in reality, most of these investors that you hear at Bigger Pockets, they've been investing for a while. They might be in year 10, year 15, year 20, and I was only on year like 5. But for some reason, I'm super competitive and I just had that sense of urgency to just, I'm behind, I need to go fast, I need to go faster. And if you have that mindset, if you have that mentality, you're going to make mistakes like me. I made a mistake in my mobile park and I lost $100,000 and I'm lucky to only lose $100,000. I could have lost a lot more. So for me, that's a blessing in disguise. But anyways, back to my point of why was I so desperate? Because I knew that I was going to have kids probably mid like 35 to like 38 range, assuming, I'm, marrying my current girlfriend now, fiance, soon to be wife in a week or so. And I had a feeling she's 4 years younger than me, about 4.5 years younger than me. So if I'm, let's say 36, she's like 32. If I'm 35, she's like 31. So, ideally, if you want to lower your risk of health problems and complications for your kids and Down syndrome, autism, all that stuff, ideally you want to have kids before 35 as a woman. I mean, yes, you can have kids much later than that, but if you want to minimize your risk and chance, which we do, you want to have your kids before 35. So I want 2 kids. So realistically, the latest we could do is if Christine is 33 and kid 1 and 35 year kid 2 at 35. And what's crazy is it's considered a geriatric pregnancy once you're 35 years old. And that's common now. That's very common now, especially if you're a working professional. 35 plus is very common. Most people I know, they have kids late 30s to early 40s. So even 35 I consider to be pretty early in my mind, but 35 plus is considered a geriatric pregnancy and considered high risk. So for me, I would rather do it before that. So because of that, I knew that. So for me, my goal, which was arbitrarily made, was $20,000 a month in net positive cash flow by the age of 35. I am 35 today, and I failed my goal. I have about maybe $8,000 to $10,000 a month in positive cash flow. I built up a $6.6 million net worth, and I cash flow about $8,000 to $10,000 a month, assuming no major expenses. If I have a major expense, then maybe that month is not as good. So for me, I think $20,000 a month is still my goal, but I think by 35 was a little bit too unrealistic, given that I wasn't willing to raise money. I wasn't willing to partner. I haven't done private money lending yet. So for me, it just was too pie in the sky, but hey, it helped me chase for something and I didn't get it, but I still built up a lot of net worth and a lot of units. So I'm glad I set that goal for myself. Maybe it wasn't the healthiest, but I felt such a sense of desperation. I bought 90 units of real estate. I tried Lunar Ecom, which was a Amazon dropshipping store from Ryan Panetta. Promised quick, easy money. Ended up losing quick and easy money. That's all I did. All I did was lose money quick and easy. I didn't make money quick and easy. I opened up my own pharmacy, which failed. Lost money on that. I did a bunch of other weird businesses that failed. So I just wanted to retire as fast as possible because I knew my time was ticking. I knew that kids were on the horizon. I knew that I wanted to have the ability, if everything was all smooth and dandy, I in my eyes and my vision that I had a few years ago, what's crazy is when I bought my mobile home park, I just want to share this side tangent. 30 units were occupied, and I think only about 70% of the tenants were paying rents. So I thought I was going to go in there, evict the tenants that weren't paying rent, found out that it was hard to evict tenants during COVID, and I would bring in about 4 to 5 new homes per month to either sell it, ideally, or rent it out. So if you kind of do the math, where let's just say I have average $500 a month. So the rentals, if you rented it out, it's about $700 a unit. And I think if it's lot rent, no, it's about $750 for a rental, $250 is lot rent. And assuming that I have a mix of half lot rent of $250 and half as a rental of $750, it's about $1,000. Divide that by 2, the average rent per unit is about $500. And there's 200 lots here. So I thought I would bring in 4 to 5 homes per month, either sell them, rent them out, whatever it took, fill up all 200 lots, and it has the potential to add even more lots. But imagine this, 500 times 200, that's $100,000 a month of gross income. And let's just say it's a 60% expense ratio, being aggressive, because mobile home park is supposed to be less expensive supposedly, but let's just say it's 60%. That's $100,000 gross income minus 60, which is $40,000 NOI. And my loan on this property is about $5,000, just call it. So I have $40,000 minus $5,000, that's $35,000 of potential net passive income. And this mobile home park would be worth close to $10 million plus. So I thought that was my golden goose. If I was making $35K, that's just off one apartment complex, and that's the bet I took. But that's pie in the sky rosiness. Not realistic. But at the time when I bought it, that's what I thought. But imagine that. $35K a month just from the mobile home park, plus I'm making $8,000 from my 26 unit, plus another $2,000 from here, from my 20 unit, plus my Amazon drop shipping store is going to bring me $3,000 to $5,000 a month, plus my pharmacy business is going to bring me money. I thought I'd be having $50,000 a month in net positive income. And had I hit it, and I thought about it, what's crazy is, had I brought 4 to 5 homes per month in my mobile home park, right around now, I'd be done with assuming I brought in 4 to 5 homes a month, was able to rent it out or sell them, right around now, after about 3 to 4 years of owning that mobile home park, I'd finally be done. And I would have hit 35, would have doubled my cash flow goal. I think I would have been, 40, 50K plus, rosy, once again, and would have retired. Because at that point, if I'm making $50K a month, I can comfortably live off $10K a month out of that, because I know real estate income is more variable. So I just divide it by 5 or divide it by 4. That's 15, about 10 to 12K a month. I can live off that right now. So, that's what my bet was. And I was so desperate to get there, but that's not reality. Reality is I fell in the mobile home park deal. Wasn't as good. And for me, I wanted to imagine at 35. So let's just say I hit my goal. Let's say I was making 40, 50K a month passive income. Me and Christine would have both quit our jobs, and that we would have traveled 35, 36, maybe 37. Maybe travel for a year and a half to 2 years, and then have kids. That was my master plan. So that's why I had such a tight window of 5 years. From 30 to 35, I want to hit my cash flow goal of 20K per month or more. So what's funny is in my mind, I thought I can get to like 40, 50K. In reality, I just got 10K today. So it's half what my goal was, but in my mind, I thought I was getting 40, 50. But had I hit that 40, 50, or even the 20, even if I hit the 20K, like looking back now, given my situation, I don't think that's enough for us to retire because real estate income is more variable. But it's still decent. But if I did hit that 40, that's my mobile park ended up being a slam dunk deal, ended up being everything I envisioned it to be. And I was able to cash flow just 30K from this one deal. I'm done at that point. Plus my 26 unit, plus my other assets, I'm done at that point. I'd probably sell one of my single family homes, pay off my primary, my mortgage, just pay property tax and cash flow 40K a month. I would take me and Christine would just become per diem pharmacists and take like a 1.5 to 2 year sabbatical where we just travel around to Southeast Asia, around the world at 35, 36. So I'd be in my retirement right now. I'd be in retirement phase right now if my mobile park hit how it's supposed to hit. But instead, it didn't hit, so I'm still working. But that was the vision. 30 to 35, grind. Stabilize my 26 unit, which is done well. My 20 unit, it's okay. Mobile park, if it was a home run deal, assuming my Amazon dropshipping store went well, my pharmacy went well, or even if it didn't go well, these are the bets I made. And I had the potential to make 40, 50K, but I failed. So, but had I hit it, I would have literally retired at 35. I just turned 35. And then at 35, just go travel. I'd get a flight to Taiwan and travel Southeast Asia, travel the world, 35, 36. And then at 36, 37, start planning for kid one. And then 2 years later, start planning for kid two. So that was kind of my vision, but I didn't hit it. So that's why I was so desperate. I just wanted to travel. And people tell me today, well, Steven, you just can sell some real estate and travel right now. And I could, but it just doesn't feel responsible. And that might be a limiting belief on my end. But if I wanted to retire today, I could. The thing holding me back from retirement is just two things. Selling my first property I bought and my second property I ever bought. Take the money from my first property, pay off this mortgage so that I lower my expenses significantly to just $2,000 a month between property tax, insurance, HOA. And I sell my second property and then have that money, pay the taxes on both these properties, and have that money more liquid. So in an index fund, in a brokerage account, or just money sitting in my bank account so that I have it as more liquidity. So I got to cash out some of my assets, and I might have to sell a third asset potentially to get even more money if I were to want to retire today. So that's what's holding me back, is selling two assets. And right now, I don't want to quite retire yet because we just got 2 jobs, golden handcuffs, and it is hard to get jobs here. If I was a normal pharmacist, I probably would, but the fact that I'm in management, it makes it harder. And for me, I just know that it takes about the fastest you can retire in real estate, which I wish someone told me a long time ago, is 10 years. I started 2017 and it's 2025 now. So I am on year 8, starting year 8. And in real estate, the first 5 years suck. For me, the first 7 years probably suck. Year 8 is when I'm finally like, this isn't as bad as I thought it was. But I still need time for things to compound. I need time for my rents to go up. I need time for my expenses to hopefully decrease because I fixed everything up already. I need time for market appreciation. I need time for interest rates to hopefully lower. I need time for cap rates to hopefully lower. And these will all increase the value of my assets. So I'm not at year 10 yet. So the fact that I started at 27 made it clear in retrospect that the best case for me is 37, 10 years. So, like I said, I wish someone told me that sooner, but hey, if everything worked out for me I could have hit it in 8 years and be retired. But I'm going to tell you, it's going to take you 10 years. And keep in mind, this is 10 years for me, and I have a high W-2 income, and I bought a bunch of real estate at a good time in a high appreciation market. If you don't have those same conditions, it may take you 15 or 20 years. But even if it did take me 20 years, I could retire if I start at 27. That's 47. That's still young. Or if it took me 15 years, I could retire at 42. That's still young. So you just have to know the fastest you can go is literally 10 years. And I was trying to do it in 8 years, and I failed. So knowing if I knew that was going to take me 10 years, yes, I wish I bought in 2015. But I was so focused on paying off my student debt, and that's all I knew. I didn't know about real estate, but had I bought a piece of real estate in 2015, it'd probably be worth a lot more than it. I probably would have made even more money. I remember looking at fourplexes in Sacramento near downtown for $500,000, two right next to each other. If I were to buy that today, it's probably doubled to $1 million each. And rents have gone up in Sacramento too, or maybe I'm getting $2,500 for each 2-bedroom. That's $10K a month. So imagine I bought a property, a fourplex that gets $10K a month in gross rental income that I bought for $500,000 at a 4% interest rate fixed for 30 years. And I have 2 of those. That's $1 million of real estate. I could have put 25% down, so that's $250K. So instead of paying off my student loans, potentially it can get $10K a month, or let's say $8 to $10K a month in gross rental income. So it's $16 to $20K. And you have 2 of those and they're worth double. You're almost done at that point. But I didn't buy. So I wish I bought more. I wish I bought real estate instead of paying off my student loans, because I could have sold that real estate to pay off the student loans faster. But I didn't know about real estate back then. So in any case, just know that your best case is you're going to retire in 10 years from real estate, unless you're making like millions of dollars through your business and you can buy a lot of real estate fast. But if you're like me and you're just a high income W-2, about 150 to 200K, it's going to take you at least 10 years. And it's going to be a grind for 10 years. If you make even less and you live in a cheaper area, maybe it'll take you 15, 20 years. But if you live in a cheaper area, you don't need as much money to retire either. On the flip side, if I move to Oklahoma or Nevada where it's cheaper to live, I can probably retire faster if I wanted to. But I like California. So for me, that's why I was just so desperate and so fast to buy a lot of real estate, made a lot of moves that in retrospect were stupid, that were shiny object syndrome and were in because of desperation, but I learned from it. And now I'm more grounded in reality, which is it's going to take you 10 years. The fastest you can go is 10 years to retire. So get your day one started today. And I'm glad I got started before I have kids, because once I have kids, it's going to be even harder. Because knowing me, I want to focus on my kids. I want to spend time with my kids. And if I'm allocating time and energy towards my kids, I don't have as much time and energy to allocate towards real estate. But that's not to discourage you if you do have kids, because to me, I always ask myself, are you going to be busier today or in 5 years? And most people will say, I'm probably going to be busier in 5 years than today. Because for me, I'm going to have young kids. Our parents are going to get older, so we have to deal with elder care for our parents potentially. So you have more obligations, and you have to take your kids to events, birthday parties, activities. They get sick. They get you sick. So it's just a lot of things you get to do. So I think I'm going to have less time. So I knew that. That's why I wanted to retire as fast as possible so that I could travel, get everything out of my system, and then focus all my time and energy on my kids. And that's why I did real estate in the first place. So that's why I was so desperate. I wish I started earlier, like everyone else did. So if you're young, please take advantage. It may seem discouraging, but get your day one started. Just save your money up. If you have to put 10% down, 20% down, 30% down, just start saving. It's going to take time. And like I said, focus on increasing your income, whether it's W-2, if you have a side hustle, if you have a business, make that money, take that money, invest it in real estate. If I owned a business that made a bunch of money, I would still live the same lifestyle, take that money and go invest it in real estate, because I know that's how you play the game to win. So like I said, just 10 years. And that's why I was so desperate because and it flew by. I'll be honest. It literally flew by. I remember getting my first deal. Fast forward 8 years later. Wow. A lot has happened. So anyways, let me know what questions you have. Hopefully you found value from this video. Please like, comment, subscribe. If you want to learn to buy multifamily real estate with some guidance, some mentorship, check out the link down below. You can email me for discount code. Otherwise, hope to see you next one. Please like, comment, subscribe. Thank you so much.